Hello, everybody. My name is Thomas Michael, and I'm the head of trading and asset management at Crystal.ai. We are currently at important crossroads in the markets, and a lot of pain has already been inflicted on the high growth tech sectors. And since the beginning of February, and the question on many investors' mind is undoubtedly, is there more to come? So today I want to share with you a brief market update in relation to the tech sector. And I'm recording this video on the Wednesday, the 12th of May, 2021. Please note that the following is not financial advice, but it's rather an expression of my personal opinion on current market conditions. So let's dive into the action here. The key narrative in the markets over the last few months has been inflation. So I have gone through the effort of looking up the Google search history over the last 5 years of the word inflation hedge, or the words inflation hedge, and we can clearly see a spike to all-time highs since the beginning of the year. Already last year there was some spike in the market as the pandemic, as all the money printing started, but we are at very high levels, and that has led to a sell-off in interest rates. And on the back of that, we have seen a very sharp rotation from high growth sectors, stocks in the technology predominantly and the working from home sectors, and into companies and sectors in the old economy. Energy, financials have been performing extremely well here. One of the biggest impacts was felt on the funds managed by Ark Investments. The ARKK, or Ark Innovation Technology ETF, is the flagship ETF from Ark, and that has been down 16% year to date as of close 11th of May. And we're currently trading around a very important support line. Just bear in mind, even though I've drawn here a horizontal line, but this needs to be confirmed for a couple of days. At the moment, I'm actually quite encouraged by the recent signs and by yesterday's move that we closed back above that support level, and with high volume. So it's a very encouraging signal that we might actually be able to resume the uptrend here. But let's see, time will tell. I think investors should stay nimble and watch the market carefully here. The other thing that has been definitely pushing Ark lower is that their strategy is very focused on small and medium-sized companies that represent a big share in the portfolio. And due to the sheer size and inflows that the funds had, they have often become a dominant shareholder in small companies. I've seen a couple of companies that have grown up to become, Ark became a 10, 15, often 20% shareholder in these companies. And if there are any fund flows, if there are any rebalancings, even small changes in the holdings can cause exaggerated moves. And it has been therefore led to quite substantial price moves and price volatility. But overall, I remain very bullish on technology. I do not think that we are at the end of the technology cycle. We are rather at the beginning of it. I think the pandemic has actually propelled us in a couple of sectors into a next level, whether it is in communication, cloud technology, or biotech. And the Indian writer Arundhati Roy, she wrote something very beautiful last year that I saw in an FT article in April 2020. Historically, pandemics have forced humans to break with the past and imagine a world new. This one is no different. It's a portal, a gateway between one world and the next. And that's why I think technology will play a key role here. Particular biotech and genomics, cloud cybersecurity I mentioned, but also food and water and renewable energy will shape our society and the development over the next couple of years. But we need to be careful. We are in a fast-changing environment, and one approach that I'm also choosing in the Future Vision portfolio, for example, that we are offering for credit investors, is that we have majority of that portfolio is invested in, or in the equity allocation, it's invested in established companies that are profitable in those target sectors, and they provide stability and consistent growth. and the remainder is invested in high growth companies, often new revolutionary technologies, but they have extremely high growth potential and can return multiples of the investment. And that holds true for every portfolio. So whenever you are trying to build something with a target to achieve long-term above average returns, healthy diversification between value, broad market exposures, and growth sectors is important. Watch out for this week's price action. We have on the 12th of May important US inflation data, and that will give us a good indication as to what we can expect with the next move in long-dated interest rates. I do think that markets will be trading in line with that. I'm showing here on the left side, you can see the 6-month chart of the 10-year US Treasury rate. And on the right-hand side, this is a 50-year chart, so the very big picture, the very long-term trend. So be mindful of that. There is definitely some risk of a spillover if rates go extremely higher and go out of control again. So these are the things that I'm watching out for. I hope this was informative and relevant for you. Thanks very much for your time and for listening, and all the best, and talk to you soon.